would like to thank you all for taking the time to join me today, and I hope this webinar will be worth your while. I have to start by apologizing for not presenting webinars for the past couple of months, as we had our hands full at Elliott Wave Forex. Preparing webinars takes a lot of time to provide data worthy of your time. Therefore, I must apologize and thank you guys for your trust and support. I am Nady Laymoud, and in the past webinar on 16th of April, we focused on analyzing the Forex market from an Elliott Wave perspective for 5 of the major Forex pairs. First, before starting, we have to view the mandatory disclaimer. Today, we will review the counts presented on the previous webinar and update them or modify them according to their price action. We will analyze these major pairs and we will try to squeeze in a 6th pair if time allows. We will identify their trends with definite targets and confirmation points. Following the previous webinar, I received a few emails asking about the best way to use Elliott Wave analysis to make profit trading. There are 2 answers to this question. I will mention both, so we will gain the maximum benefit possible. The short answer is that Elliott Wave analysis is best used as a framework along with your trading technique of choice. Elliott Wave analysis is compatible with all trading styles, or you can use that as a confirmation. You can start your trading day by viewing your Elliott Wave analysis and know where you stand for a given pair. Then apply your trading technique, and if Elliott Wave analysis agrees with your trading technique or tools, then you can enter the market with increased confidence. If they disagree, you can still enter the market with extra caution, knowing that probabilities are not on your side. Elliott Wave analysis is known for its high accuracy. More often than not, targets would be reached to the pep, and you see price action reverse direction and move in the other way right after reaching that target. In other words, Elliott Wave analysis is simple to use and it works. I will mention the second answer presently when we quickly go over the basics of Elliott Wave analysis. Today we will start by briefly going through the Elliott Wave basics for 5 minutes before analyzing the following pairs for the long and mid-term views from an Elliott Wave perspective, complete with targets and confirmation points. And of course, we will mention their alternate counts. First, we will analyze the Euro USD dollar pair and the Pound US dollar pair and USD Japanese yen and GBP Japanese yen and the star of the year USD franc. And finally, if we have time, we will analyze the US dollar Canadian dollar. Now, what is Elliott Wave analysis? We will take the next 5 minutes to quickly go through Elliott Wave basics to familiarize those of us who are new to Elliott Wave analysis and to refresh our memories with its 3 simple rules. Elliott Wave analysis is simple. The market follows a basic pattern of 1, 2, 3, 5, 4, 5 waves up, followed by an A, B, C correction of 3 waves in the opposite direction. If you know where you are within this basic pattern, then you know what's going to happen next, and then you can make money. The basic pattern will build on itself to create fractals, and that's exactly the way all Forex markets ultimately move. If you do not know what fractals are, don't worry, we will explain what fractals are in a minute. The difficulty, of course, is knowing when the market is in a correction and what corrective structure is unfolding in this position and this larger position. And because there are 13 possible corrective structure, what you will need is a thorough knowledge of Elliott Wave rules and guidelines, as well as years of experience to help you know what corrective structure is unfolding, and more importantly, when it's over, so that you can be fully prepared to take action when the trend resumes. Sure enough, some of these corrective structures are here to the point that I have not witnessed in the past 6 years analyzing the market. To better illustrate fractal nature of Elliott Wave theory, let's assume we are viewing the 1-hour chart. A basic Elliott pattern will look like this pattern, which is composed of 5 waves up and 3 waves down. Elliott. Now, what if we viewed this pattern on the daily chart? The whole price action will look smaller with less details. To complete this pattern, price would unfold toward the upside to complete a third wave before consolidating in a sideways manner to complete a fourth, and then moving toward the upside to complete a 5-wave structure. After the 5-wave structure complete, we expect a 3-wave decline to correct the whole structure. All in all, Elliott wave theory is governed by 3 simple rules. These rules cannot be bent or broken. If we come up with a count that breaks any of these rules, then the analysis is considered wrong and invalid. Any other count that respects these rules is considered a technically valid count, no matter how improbable it is. The first rule is that wave 2 never retraces more than 100% of wave 1. Therefore, we would be correct if we labeled the right diagram, the left diagram, as waves 1 and 2, and on the other hand, the diagrams on the right cannot be labeled as waves 1 and 2 because wave 2 moved beyond the start of wave 1. The second rule is that wave 3 cannot be the shortest wave among waves 1, 3, and 5. That's why the leftmost diagram is the right and can be labeled a valid count because wave 3 is longer than waves 1 and wave 5. Also, the diagram in the middle is valid because even though wave 5 is longer than wave 3, but wave 3 is longer than the first wave. And finally, the rightmost diagram is invalid because wave 3 is shorter than both wave 1 and wave 5. The third and final rule is that wave 4 cannot enter the price territory of wave 1, except in the rare case of a diagonal, which is a rare case of motive wave. On the left diagram, wave 4 respected the high of wave 1 and did not enter its price territory, and it's considered a valid count. On the other hand, if we're looking at the right diagram, we will see that wave 4 did not respect the high of wave 1 and it entered its price territory, thereby it is an invalid count. Why these rules are important? Because rules determine the trend. If rules were ignored, then the result would be skewed. And more importantly, we use these rules to determine our stop-loss point. If a count reaches a certain point, then the count is invalid, and we have to go back to the drawing board to analyze the market and understand its behavior. As a quick example, we use the first rule to determine the invalidation point for second waves, so we draw a line at the start of wave 1, and if the downwards movement moves below that line we draw, then our count is invalid. Now, let's move to the practical use of Elliott wave analysis. Earlier, I talked about the best way to use Elliott wave analysis and mentioned that there are 2 answers for that question. The first is by using Elliott wave analysis with your existing trading technique, and the second point is that most of the time we provide 2 counts, a main count and an alternate count. Each count with its own confirmation point to cover the probabilities of a given pair. We all know that Forex market is ultimately a game of probability. Both counts are technically valid counts. The first count is considered the main count because it is supported by classical technical analysis tool at the time of publishing the analysis. Also at times, the alternate count might not provide the best fit from Elliott wave's point of view. We use 2 counts simply because it answers a very good question, which is, what should we do if the market moved unexpectedly against us? Should we stay on the sideline or be prepared and take action immediately? No one You see, no one can predict the market with 100% accuracy. Therefore, having alternate count is a powerful technique to help us understand what the market is doing in case it unfolds against us. For both counts, we use confirmation point. So at the time of publishing the analysis, both counts are valid, but once the confirmation point is reached, the main count the main count's probabilities increase, and so our confidence in that count, and therefore we trade according to that count. On the other hand, if this confirmation point was reached, we shift our focus to the alternate count and trade according to its expectations. One last note about confirmation point is that they may be used as entry points. I hope so far the points we covered made sense, and they will get clearer as we go through the analysis of the currency pairs we have today. With that being said, let's move to the first pair we are going to analyze today, the most traded currency pair, euro-dollar. We will start by reviewing what we expected from euro-dollar in the last webinar. Back then, euro-dollar had just hit a yearly low and has been declining for almost a year. We expected euro-dollar to reverse directions and move upwards with a first target at 1.1104 and the second target at 1.1465. We mentioned this is to be expected only if euro-dollar moved above its confirmation point at 1.1053. Once the confirmation point was reached, euro-dollar unfolded upwards, reaching the first target and exceeding the second target by 1 pip at 1.1466 on May 10th. That behavior till the 10th of May agrees with the main count. Euro-dollar continued consolidating afterwards in a sideways manner with downwards tendencies. That behavior left the upwards movement as a three-wave structure. Therefore, this suggests one of two counts. We will start with the weekly chart, and the main count suggests that wave C maroon of primary degree is likely complete, and that wave 1 black of intermediate degree is unfolding toward the upside. Primary wave B maroon unfolded as a triangle labeled waves A through E black, with wave E black unfolding as a double zigzag labeled waves W, X, and Y flow. And on the other hand, wave C maroon unfolded toward the downside as an impulse labeled waves 1 through 5 black, and we can clearly see the subdivisions within wave 1 black as it unfolded as a 5-wave structure labeled waves 1 through 5 blue. The subdivisions within wave 3 black and wave 5 black are not as clear on the weekly chart, but they are clear on the daily chart, and I think the daily chart will review the subdivisions. So, what is the first interpretation of this 3 upward movement? It's quite likely that wave 3 blue of minor degree is starting to extend upwards with waves 1 and 2 pink of minute degree complete, and euro-dollar is about to start a third wave toward the upside. This count would be confirmed by movement above 1.1467, and we have two targets for the completion of wave 3 pink of minute degree. The first conservative target is at 1.1753, as at that level wave 3 pink will reach equality with wave 1 pink, and the second target, which is the most common target for third waves, is at 1.2335, as at that level wave 3 pink will reach 1.618, the length of wave 1 pink. Now, let's move to the daily chart to see the subdivisions of primary wave C maroon from the end of wave 1 black blue within wave 1 black. On the daily chart, we can clearly see the subdivisions within intermediate wave 3 black as an impulse labeled wave 1 through 5 blue, and wave 4 black followed as a triangle labeled waves A through E blue. The subdivisions of wave 5 black is quite visible on the daily chart, and after the completion of wave C maroon, it's expected that waves 1 and 2 blue are complete, with wave 2 blue, unfolding as a three-wave structure labeled A, B, and C pink. The main count expects that wave 3 black is extending toward the upside as an impulse labeled waves 1 through 5 blue through 5 pink, with waves 1 and 2 pink complete and wave 3 pink is underway. We can clearly see on the daily chart that wave 1 pink unfolded as an impulse labeled waves 1 through 5 green, and that wave 2 blue and that wave 2 pink was a double combination labeled waves W, X, and Y green. As we mentioned on the weekly chart, this count would be confirmed by movement above 1.1467, and we have two targets for the completion of wave 3 pink. The first target is at 1.1753, as at that level wave 3 pink will reach equality with wave 1 pink, and the second target is at 1.2335, as at that level wave 3 pink will reach 1.618, the length of wave 1 pink. This count would be discarded and invalidated by movement below 1.0520, as wave 2 pink may not retrace more than 100% the length of wave 1 pink. It should be noted that once we have confirmation on the daily chart that wave 3 pink is unfolding toward the upside, the invalidation point will be moved to the end of wave 2 pink. If that invalidation point is reached, then we will automatically shift our focus to the alternate weekly count, which expects that primary wave C maroon has more to offer toward the downside. The alternate count suggests that euro-dollar pair needs one last dip to complete the 5-wave sequence, and this count is presented because we should always assume that trend remains the same until proven otherwise. We all know the saying, trend is your friend. So even though euro-dollar is showing signs of strength, we should always keep in mind the probability that the trend is still incomplete. This count suggests that the recent upwards 3-wave structure completes a 4th wave of intermediate degree labeled wave 4 black. Which unfolded as a zigzag labeled waves A, B, and C blue. Our confidence in this count will start to increase by movement below 1.0520, and the final confirmation point, which would increase our confidence dramatically, is by movement below 1.0462. We should expect euro-dollar to continue downward and find support near 1.0345, as at that level wave C maroon will reach equality with wave A maroon. Now, moving to our second currency pair for today's session, which is British Pound US Dollar pair or cable. We will start by reviewing what we expected from cable in the last webinar. Back then, cable followed the euro-dollar pair and had just hit a yearly low and has been declining also for almost a year. We expected cable back to also reverse directions and move toward the upside with a target at 1.5569, and the second target is at 1.6189. We mentioned this is to be expected only if cable unfolded above its confirmation point. Once its confirmation point was reached, cable unfolded upwards, reaching and exceeding its first target and fell short of its second target. Now, let's see what should we expect from cable for the rest of this year 2015. We will start from the weekly chart and cable weekly chart differs from euro-dollar long-term view, as the main count expects cable to reverse directions and move downwards within a third wave. On the weekly chart, it's expected that primary wave B maroon is complete and that primary wave C maroon is unfolding toward the downside. Primary wave B maroon unfolded as a zigzag correction labeled waves A, B, and C black, and within primary wave C maroon, waves 1 and 2 black are likely complete, with wave 1 black unfolding as an impulse labeled waves 1 through 5 blue, and with wave 2 black unfolded as a zigzag toward the upside labeled waves A, B, and C blue. This count would be confirmed. It would be confirmed that wave 3 black is unfolding toward the downside by movement below 1.4566, and we have our long-term target for the completion of wave 3 black at 1.3320, as at that level wave 3 black will reach equality with wave 1 black. This count would be invalidated by movement above 1.5932, as within wave 3 black, no second wave may retrace more than 100% the length of its first wave. We will move now to the daily chart, and the daily chart explains the subdivisions within wave 2 black as A, B, and C blue as a zigzag correction, with waves B and C blue clearly viewed as an A, B, C zigzag for B blue, and an impulse labeled waves 1 through 5 pink to complete wave C blue and ultimately wave 2 black. This count expects that within wave 3 black, waves 1 and 2 pink are complete, and it's likely that wave 2 pink might offer some upwards movement to be complete before reversing directions within wave 3 pink. This count would be initially confirmed by movement below 1.5330, and our confidence will be increased dramatically by movement below 1.5170. We have two targets for the completion of wave 3 pink. The first target is at 1.5092, as at that level wave 3 pink will reach equality with wave 1 pink. And the second target is at 1.4723, as wave 3 pink at that level will reach 1.618, the length of wave 1 pink. We can clearly see on the daily MACD that MACD made a bearish divergence between the end of wave A blue and the end of wave C blue, as MACD didn't register the price highs made by price action. Now, this count would be invalidated by movement above 1.5932, as wave 2 pink may not retrace more than 100% the length of wave 1 pink. If that invalidation point was met, we will shift our focus to the alternate weekly count, and the alternate weekly count suggests that wave 2 black is incomplete and that it has more to offer toward the upside, and the only difference between both mean and alternate counts is within the subdivisions within wave B blue. Wave B blue this count suggests that wave B blue is unfolded as a triangle labeled waves A through E pink, and this count would be confirmed by movement above 1.5932, and we have a target at 1.6189, as at that level wave 2 black will reach 0.618, the length of wave 1 black. If you remember correctly, that target is the second target we had in the previous webinar for cable. This count would be invalidated by movement above 1.7193, as wave 2 black may not retrace more than 100% the length of wave 1 black, and as well, this count would be invalidated by movement below 1.5466, as wave B blue may not retrace more than 100% the length of wave A blue, and it should be noted that that once we have confirmation on the weekly chart that wave 2 black is unfolding toward the upside, the invalidation point will be moved to the end of wave B blue. Now let's move to our only cross pair we are going to analyze today, British pound Japanese yen. Trading cross currencies is somehow considered an advanced art of trading, more like trading the S&P 500, which is not for the faint of heart. But from an Elliott wave perspective, cross currencies follow the same rules and guidelines of other dollar pairs. As usual, we will start with what we expected from the British pound Japanese yen and see how it unfolded so far. To start with, we expected British pound Japanese yen to unfold toward the upside to reach a target at 191.83 only after moving above its confirmation point at 185.04, and the final confirmation point was further up at 189.72. British pound Japanese yen unfolded as expected and exceeded its target toward the upside. On the weekly chart, the main count expects that a high is in place for British pound Japanese yen and that it is about to move toward the downside, consolidating in a B wave of intermediate degree. At first glance on this count, we see that pound yen has been advancing relentlessly for almost 4 years. At this stage, the trend seems exhausted, especially with its MACD readings, which we will cover presently. It seems that traders should be cautious with pound yen uptrend as it appears mature. The main count expects that with A block is complete as an impulse labeled waves 1 through 5 low, with wave 3 low is seen as an extended third wave labeled waves 1 through 5 pink, with wave 3 pink unfolding as an impulse labeled waves 1 through 5 green. An important point here is that the rule of alternation between wave 2 and 4 pink was present, with wave 2 pink unfolding as a sharp zigzag toward the downside, while wave 4 pink unfolded as an expanded flat correction. After the completion of wave 3 blue, wave 4 blue unfolded as a zigzag correction labeled waves A, B, and C pink, and wave 5 blue followed toward the upside, completing wave A black. Regarding the weekly MACD readings, 2 points are of significance. First, we notice that the third of a third wave, which is represented here, had the greatest momentum, and that ever since, MACD failed to register a higher high, even though price action continued its uptrend. As we know, that is typical MACD behavior and it supports the main count view. The second point is that MACD continued to exhibit the same type of divergence between the end of wave 3 blue and wave 5 blue. Our confidence in this count will increase dramatically by movement below 174.88, and we have 2 targets for the completion of wave B black. The first target is at 165.84, as at that level with B black will reach 0.382, the length of wave A black. And the second target is at 147.14, as at that level with B black will reach 0.618 of wave B black. Pound yen is expected to find support in the middle of this target zone on the long term before reversing directions and moving toward the upside within wave C black. On the daily chart, wave 4 pink unfolded as a zigzag labeled A, B, and C pink, and we can see a 5-wave structure with a 5th extension in wave 5 blue, completing wave A black. This count expects that wave A blue within wave B black is unfolding toward the downside, with waves 1 and 2 pink complete, and wave 3 pink is at its very early stages. This count would be initially confirmed by movement below 184.99, and we have 2 targets for the completion of wave 3 pink. The first target is at 184.40, and the second target is at 177.69. It should be noted that pound yen doesn't provide us with low risk trade because of 2 main points. Confirmation point is very close to the first target and away from the invalidation point, and that doesn't provide us with a low risk trade. The second point is that what this count suggests is trading against the long-term trend, which is not a wise move, and therefore we have to wait and we have to trade this pair toward the downside. Therefore, we should be very cautious. Because of these 2 points, both main and alternate counts have almost equal probabilities. This count would be invalidated by movement above 195.989, as wave 2 pink may not retrace more than 100% the length of wave 1 pink. If that invalidation point was reached, then we will automatically move to the alternate weekly count, which expects that a 5-wave structure might be incomplete, and that wave 5 blue has more to offer toward the upside. Within wave 5 blue, it's expected that waves 1 through 4 pink are complete and that wave 5 pink has more to offer to the upside. This count will be confirmed by movement above 195.89, and we have two targets for the completion of wave 5 pink. The first target is at 198.07. As at that level, wave 5 pink will reach 0.618, the distance traveled from the start of wave 1 pink to the end of wave 4 pink. The second target and the second resistance level is at 202.68, as at that level, wave 5 blue will reach 0.382, the distance traveled from the start of wave 1 blue to the end of wave 4 blue. This count would be discarded by movement below 174.88, as within wave 5 blue, no second wave may retrace more than 100% the length of its first wave. Now, let's move to the US dollar Japanese yen currency pair and see if its amazing advance is complete yet or if new highs lies ahead. Let's see what we expected from the American dollar Japanese yen and see how it unfolded so far. To start with, we mentioned two specific points regarding this pair. The first point is that both main and alternate counts have equal probabilities, and also that we cannot help but notice the affinity of this pair to form triangles with three visible, well-defined triangles on the weekly chart. The alternate count expected dollar yen to unfold toward the upside to reach 124.45 only if its confirmation point was reached at 122.03. Dollar yen unfolded as expected, moving toward the upside to reach its target at 124.45 and exceeding it before reversing directions and moving in a sideways manner. Moving on to the weekly chart, the main count expects that a 5-wave sequence is complete, which is labeled waves 1 through 5 black, completing a bigger structure labeled wave A maroon. Wave 3 black was an extended third wave, and wave 4 black was a triangle labeled waves A through E blue, and wave 5 black unfolded as an impulse as expected, labeled waves 1 through 5 blue, with wave 4 blue unfolding also as a triangle labeled waves A through E pink. This count would be confirmed. It would be confirmed that wave B maroon is unfolding toward the downside, initially by movement below 118.88, and the final confirmation point, which will boost our confidence in this count, is by movement below 101.51. We have two targets for the completion of wave B maroon, and we should expect dollar yen to find support near 106.70, as at that level wave B maroon will reach 0.382, the length of wave A maroon. If exceeded, then we should expect the yen to find support near 94.86, as at that level wave B maroon will reach 0.618 of wave A maroon. We should understand that these targets are long-term targets for the dollar yen. Moving on to the daily chart to provide more midterm targets, we can see that within wave B maroon, wave A black is unfolding as a 3-wave structure, not as with what we should typically see as a 5-wave structure. The structure within wave A black suggests that wave A black is unfolding as a 3-wave structure, not a typical 5-wave structure. This, in turn, suggests that wave A black is not a zigzag correction and opens the possibility for wave B maroon to be either a flat correction or a triangle or even a combination, but it is a bit early to definitely tell with confidence. Within wave A black, it's expected that waves A and B blue are complete, and wave C blue is starting to unfold downwards, with A blue unfolded as a zigzag labeled A, B, and C pink, with A pink unfolding as a leading diagonal labeled waves 1 through 5 green, with B blue unfolded toward the upside as a zigzag labeled A, B, and C pink, and it seems that with B blue is mature enough and that structure is complete, and that we should expect wave C blue to unfold toward the downside in a 5-wave structure to complete wave A black. We have 3 targets for the completion of wave C blue. The first target is at 119.86, as at that level wave C blue will reach equality with wave A blue, and the second target is at 117.78, as at that level wave C blue will reach 1.38 with the length of wave A blue, and this is a common target for C waves in a flat correction. The final target is at, which should provide support for the dollar yen, is at 116.49, as at that level of C blue will reach 1.618, the length of wave A blue. This count will be discarded by movement above 125.86, as with B blue may not retrace more than 105% the length of wave A blue within a flat correction. If that point is reached, then we will automatically shift our focus to the alternate daily count, which expects that wave B blue is incomplete and that dollar yen has more to offer toward the upside, and this count expects that wave A black is unfolding as an expanded flat correction rather than a flat correction. In expanded flat corrections, wave B blue is expected to move beyond the start of wave A blue. Therefore, this count expects that wave A blue is complete and that wave B blue is unfolding toward the upside. This count is presented because the latest upwards movement within wave B blue can be interpreted as a leading diagonal labeled waves 1 through 5 green, and leading diagonals are a 5-wave structures. Then wave B blue is seen as incomplete since wave B blue is expected to unfold as a 5-3-5. Therefore, we should expect a first leg to be complete as a 5-wave structure, then a 3-leg toward the downside, and finally a 5-wave structure to complete wave B blue. This count will be confirmed by movement above 125.86, and the first resistance point is at 127.32, as at that level wave B blue will reach 1.272 of wave A blue, and the final target, which is the common target for B waves within expanded flat corrections, is at 127.92, as at that level wave B blue will reach 1.38 to the length of wave A blue. This count would be invalidated and discarded by movement below 120.41, as with B pink within with B blue may not retrace more than 100% the length of wave A pink. With the dollar yen analysis behind us, it's time to analyze the star currency of the year, the US dollar Swiss franc. This pair single-handedly caused the bankruptcy of few major Forex brokers when Switzerland decided to abandon Eurocap earlier this year. So without further ado, let's see how Swizzy unfolded following the previous analysis. First off, we had to use the 2-week chart for clarification purposes and to bring long-term patterns into perspective. Back then, we expected Swizzy to unfold toward the downside in a corrective manner to complete wave 2 flow before reversing directions and moving toward the upside in an impulsive manner. Also, on the daily chart, we specified targets for the completion of that correction labeled wave 2 flow. The daily chart expected Swizzy to reach 0.9444, and if exceeded then to 0.9216, only if the confirmation point was reached below 0.9480. Both targets were reached and exceeded, and Swizzy reversed directions and started moving upwards. From that, it seems that the first part of Elliott wave expectations was reached, and the second part is yet to be fulfilled. On the 2 weeks chart, the main count expects that primary wave A primary wave A maroon, which is completed down here, was complete as a 5-wave sequence labeled waves 1 through 5 black, with wave 5 black unfolding as an impulse labeled waves 1 through 5 blue. This suggests that wave B maroon is unfolding toward the upside as a 3-wave structure labeled A, B, and C black, with wave A black unfolding as an impulse labeled waves 1 through 5 blue. This suggests that wave B maroon is unfolding toward the upside as a zigzag correction. After the completion of wave B black unfolded as an expanded flat correction labeled A, B, and C blue. Let's take a moment to consider what the main count implies. The main count expects Swizzy to continue unfolding toward the upside for the midterm to complete wave C black and therefore wave B maroon. Within wave C black, it's expected that waves 1 and 2 blue are complete and that wave C blue is starting to unfold toward the upside. Our confidence will increase in the main count by movement above 1.0241, and Swizzy is expected to find resistance near 1.0872, as at that level wave 3 blue will reach equality with wave 1 blue, and if exceeded, then to 1.1366, as at that level wave 3 blue will reach 1.618, the length of wave 1 blue. That target at 1.1366 represents that at that level wave B maroon will reach 0.382, the length of wave A maroon. Moving on to the daily chart from the end of wave B blue, to view the recent movements within dollar-franc currency pair. On the daily chart, the main count sees wave B black complete as an expanded flat correction labeled waves 1 through 5 green. As an expanded flat correction labeled waves 1, A, B, and C blue, with wave B blue unfolding as a zigzag labeled waves A, B, and C pink, and with C pink unfolded as an impulse labeled waves 1 through 5 green. Within wave C black, it's expected that waves 1 and 2 blue are complete, with wave 1 blue unfolding as an impulse labeled waves 1 through 5 pink, with wave 3 pink unfolding as an impulse also labeled waves 1 through 5 green. Following the completion of wave 1 blue, wave 2 blue unfolded toward the downside as a zigzag labeled A, B, and C pink, and it's clear that wave C pink unfolded as a 5-wave structure toward the downside. Within wave 3 blue, it's expected that wave 1 pink is unfolding toward the upside as an impulse labeled waves 1 through 5 green, with waves 1 and 2 green complete, and wave 3 green is at its late stages, with waves 1 through 3 green orange complete, and this count expects a slight downwards movement to complete with 4 orange before reversing directions and moving toward the upside to complete with 3 green. This count will be confirmed by movement above 0.9904, and we have a target for the completion of wave 3 green at 1.0079, as at that level wave 3 green will reach 200% the length of wave 1 green, which is the next logical target for the completion of wave 3 green, since wave 3 green already exceeded 1.618, which is the common target for the completion of third waves. This count would be invalidated by movement below 0.9150, as within wave 3 green, no second wave may retrace more than 100% of its first wave. If that invalidation point was reached, then we will automatically shift our focus to the alternate weekly count, which expects that wave B maroon is complete and that wave C maroon is starting to unfold toward the downside. And within wave C maroon, waves 1 and 2 black are complete, and wave 3 black is underway. This count would be initially confirmed by movement below 0.8335, and we have 2 targets for the completion of wave 3 black. The first target is at 0.8224, As at that level with 3 black, we reach equality with wave 1 black. And if exceeded, then to the most common ratio for third waves near 0.7047, as at that level with 3 black, we reach 1.618 of wave 1 black. This count would be discarded and invalidated by a movement above 1.0241, as wave 2 black may not retrace more than 100% of wave 1 black. With that, we completed our five counts, and let's see if we have more time to cover USD Canadian dollar. Okay, unfortunately, it seems that for the second time in a row, we ran out of time before getting the chance to view the USD Canadian chart. This time, I'm leaving the charts on the screen as long as we can during the Q&A session, and please keep in mind that this webinar is recorded and you can come back later on and view each chart and confirm the numbers when needed. With that, we are done for the day, and I hope I did not bore you guys with all the charts and numbers. Thank you so much for being such a great audience. Until next time, and have a fantastic day. If you have any questions, I will be available for Q&A for the next 5 minutes or so. Right, Adenda? Okay, MRC are asking, do I expect dollar weakness? The main counts of the dollar bears expect dollar weakness, yes, but the alternate counts for both. First, the euro dollar count, as we discussed, the main count expects weakness for the dollar, while the alternate count expects dollar to have one last high before moving to the downside, if that makes sense. On the other hand, you see that the euro dollar and the cable, the British pound dollar pair, does not move along as one should expect on the long-term charts, and therefore they may differ in expectations. With that being said, you can see that let me better explain it on the chart. If I can get that chart of the pound dollar to better explain what I meant. This chart suggests that dollar is going to be strong, not weak, as this pair expect the pound to unfold toward the downside in a third wave. However, the alternate count expects, and if you ask me, I think this count has a really great chance of happening. I think this count expects dollar weakness, and it has high probability once the confirmation above 1.5932 is exceeded. Now, before I forget, let me put the US dollar Canadian dollar bear on the screen before leaving. This is what initially was expected, and then this is how it unfolded. And finally, this is our weekly chart, daily chart, and alternate weekly chart. Let me focus on the daily chart for a minute because I didn't give it enough time. DZ Besta are asking about gold analysis. Well, actually, I didn't prepare a gold chart for this webinar, but I promise you the next webinar I will bring the dollar, the gold charts with me, and even if we didn't have a time for it, I will leave the chart in the Q&A session. I'm sorry about that. You're welcome. So, any more questions? Thank you so much for being a great audience and have a great day. Bye bye.